Good afternoon, welcome back, and today we're going to be talking about SMT in lesson 5. Okay, so we're going to be talking about SMT between NQ, ES, and YM. SMT is simply when one of these correlated indices fail to confirm what the others are doing. Okay, so normally NQ and ES and YM should move together. They do move together. If they're all bullish, you'd expect them to make higher highs, and if they're all bearish, you'd expect them to make lower lows. So when that doesn't happen, that's where things start to get interesting. For example, let's say ES pulls back into a bullish fair value gap. Maybe it retraces into a discounted area and starts trading back into the inefficiency. But at the same time, NQ doesn't retrace as deeply. NQ maybe stays elevated and holds structure and never reaches its own fair value gap. And that's information for us. Okay? What the market is telling us is that NQ is showing relative strength. So while ES is willing to pull back and rebalance, buyers aren't allowing NQ to trade at those lower prices. So a lot of newer traders will look at that and think that they've missed the move because NQ never reached the area of interest. But I actually look at it the opposite way. So if ES is doing the work and retracing into liquidity, whilst NQ is holding higher prices, that tells me that institutions are likely defending NQ. So I'm constantly watching for SMT divergence to develop. So let's say that ES creates a slightly lower low into its bullish FEG, and at the same time, NQ refuses to make a lower low and instead holds above the previous swing low. So that is bullish SMT. One market is making a lower low while the stronger market refuses to confirm it. Okay, so now once ES finds support and starts moving higher, NQ often becomes a leader. You might think why, but it's because NQ never reached discounted pricing in the first place, so it was already showing strength whilst ES was retracing. So when buyers step in, NQ tends to expand aggressively and often delivers the cleanest move. And this is why I always compare indices. I'm not just looking at NQ in isolation. I'm asking myself, is NQ stronger than ES? Is ES stronger than YM? Who's making the lower low? Who's refusing to make the lower low? Who's making the higher high? And I'm constantly asking myself all these questions. Who's refusing to confirm the higher highs? And which assets are stronger? Which assets are weaker? And those answers tell me where smart money is likely positioned. So a simple rule that I use is if ES retraces into a bullish 15-minute fair value gap after it's already taken out my 4-hour liquidity and NQ doesn't, it immediately grabs my attention because the market that refuses to retrace is often the market that runs the hardest once the reaction begins. So that's a real power of SMT. It's not just spotting the divergence, it's actually identifying which market is showing strength and then positioning yourself for the expansion that usually follows.